In this video, I'll provide a review of the PepsiCo stock and what I personally look for when evaluating potential stock purchases. I'll run through what the company does, how they make money, and then I'll look at some of the numbers and metrics. My personal goal is to create a dividend portfolio that provides me with a passive income. For me, stock analysis for my goals comes down to 2 points. Does the company have a history of paying reliable and growing dividends? And can the company continue to make profits and therefore pay dividends for decades to come? So what do PepsiCo do? PepsiCo is an American multinational food, snack and beverage corporation. Their product mix as of 2019, based on worldwide net revenue, consists of 54% foods and 46% beverages. This might come as a surprise to some people that think that PepsiCo would just start and end with Pepsi-Cola. They do have a diverse global portfolio of brands. As well as Pepsi-Cola, they also own Lay's Crisps, Mountain Dew, Doritos, Gatorade, Tropicana, Quaker Oats, Lipton Iced Tea, Aquafina Water, Cheetos, 7-Up, Rockstar Energy Drinks, Walker's Crisps, and many, many more. In fact, 23 PepsiCo brands generate more than $1 billion each in annual retail sales. PepsiCo products are enjoyed by consumers more than 1 billion times a day, in more than 200 countries around the world. Their net revenue split per location is made up of 61% from North America, 11% from Latin America, 18% from Europe, 6% from Africa, the Middle East and South Asia, 4% from Asia, Australia, New Zealand and China. Let's now take a look through the numbers that I find useful in evaluating stocks. PepsiCo has a current dividend yield of 2.99%, and last year's dividend yield averaged at 2.84%, so it's a positive sign for dividend investors that the yield has increased. Basically, it just means that we're getting more income for our money than we did last year. In fact, PepsiCo have increased their dividend consecutively for 48 years, which makes them a dividend aristocrat. And they're well on their way to one day becoming a dividend king, if they can manage another 2 years of increases. Over the past 5 years, the average dividend per share growth rate was 7.8% per year, and during the past 10 years, the average dividend per share growth rate was 7.85% per year. So the growth remains very consistent in the short and medium term, which does bode well for the future. The payout ratio is currently 78.32%. This just shows the proportion of earnings a company pays shareholders in dividends, and is expressed as a percentage of the company's total earnings. With payout ratios, obviously the lower the percentage, the better, and I tend to consider around 80% as being a high ratio. Even looking at the 5-year payout ratio history, we see that this is well within the normal range, where the average is 72.33%. The market cap of PepsiCo is $188 billion, which puts it 35th in the largest American companies by market cap. I do like these large blue chip companies in my dividend portfolio, as they tend to be mature, stable organizations, and the dividend just feels safer than smaller cap companies or new startups. PepsiCo has a share price of $133.87, and this puts it in the higher end of the 52-week price range. The 52-week low price of $101.42 happened in March 2020, and the stock has bounced back since then. The current price seems to be quite reasonable when you compare it to the 50-day average of $141.08 and the 200-day average of $139.91. So now let's look at the quarterly dividend history of the company. The graph shows a clear upward trend, and what I do like is that there was even an increase during 2020. I'd imagine that the global pandemic wouldn't have affected the business, and people in lockdown would have consumed more drinks and snacks than if they were in the office or out and about. I think this shows PepsiCo to be very robust as a business, and the increases also demonstrate the commitment towards dividends for their shareholders. Businesses that can grow their dividends at a decent rate and maintain a stable payout can generate substantial wealth for shareholders over the long term. Let's now have a look at the chart showing PepsiCo's revenue, cash flow, and net income. Whilst it is important to look at dividend history, we also need to look at the company's earning potential and trends, as the revenue and profits of the company will drive future dividend payments. So this is a nice chart to me. I like that we can clearly see growing revenues from around 2016, as there was a clear dip from 2014 to 2016. So it does look like things are on the right track. They were actually able to grow revenues for 2020, despite its largest division being hamstrung by restaurants, hotels and offices being closed or at reduced capacity for most of the year. Net income is really interesting too, as it stayed pretty consistent throughout. I do wonder what happened in 2019, as it seems they were able to use the revenues more efficiently to generate more profit. If we briefly look at the data table, we can see that the profit margin tends to average at around 10%, but then doubled to 20% in 2019, before dropping back down to around 10% again. A good margin will vary considerably by industry and size of the business, but as a general rule of thumb, a 10% net profit margin is considered average, a 20% considered good, and a 5% considered low. The cash flow has remained consistent too during this period, averaging around a 10 billion cash inflow each year. Again, this is great to see, as at the most fundamental level, a company's ability to create value for shareholders, either through business growth or dividends, is determined by its ability to generate positive cash flows. So what is my opinion on PepsiCo? For me, PepsiCo is one of those companies that I can say with pretty much near certainty that won't be going anywhere anytime soon. The brand names, customer loyalty and presence all over the world makes it a real powerhouse, not just in the drinks and snacks world, but also in the wider business world. If you were to go to a bar, restaurant, sports stadium or music venue, there's a high likelihood that they will serve Pepsi Cola. In addition, most supermarkets and food selling shops will stock a multitude of PepsiCo brands. I also believe that consumers would prefer to purchase their favourite branded product rather than purchase a cheaper alternative, and I can't see this ever changing. PepsiCo have also recently announced a partnership with Beyond Meat, where they'll look to work together to produce new snack and beverage products that use plant-based proteins. I think this is another clever move by PepsiCo to further diversify their product portfolio and make inroads into the ever-increasing vegan market. I currently hold 10 shares of PepsiCo. They're currently my third largest holding by market value in my portfolio, and they're one of my favourite buy and hold stocks that I don't ever have to worry about. In conclusion, with their instantly recognisable brands, diverse portfolio of high income yielding products, and strong dividend history, I personally believe that PepsiCo will be a great addition to a dividend growth portfolio. But again, please remember that this isn't investment advice, and you should always do your own research and due diligence. I hope that you've enjoyed this stock review and taken some value from it. If you have, then please like the video and subscribe to the channel to make sure that you don't miss any future videos. Also, please let me know what stocks you'd like me to review in the comments section below. Thanks again for watching, and I'll see you in the next video.